Brazilian securities regulator could scupper peace efforts to police crypto. Hyperinflation in Turkey makes crypto the best alternative. Gareth Soloway says Bitcoin looks bad in the short term. World Vision becomes first South Korean charity to accept crypto. Lawyer for alleged Russian crypto money launderer seeks prisoner swap with US. Kucoin highlights flaws in Defi platform Acala's post-exploit proposal. Crypto influencer collects, then returns $100,000 from investors in fake scheme. Marathon Digital energized 25,000 miners in August and generated over 184 bitcoins. With crypto's blowups, Tradefi boasts its legal rigor. Parent of crypto ETF provider 21 Shares secures $25 million in funding, valuing it at $2 billion. Hello everyone and welcome to the Daily Crypto. We are back with the most interesting news updates for you, but before we share them, let's take a look at the Fear and Greed Index for today and see where we are with the market sentiment for the day. Currently, the FNG index is at 24, which is a small improvement from yesterday. As of right now, Bitcoin and Ethereum are trading for $18,720 and $1,512 respectively. Let's jump into the video now. In a move that could impede the aspirations of MPs to regulate the sector on their own, the Brazilian markets regulator has stated that it wants to play a prominent role in the regulation of cryptocurrencies. According to the financial division of the giant Brazilian newspaper Globo, the Brazilian Securities and Exchange Commission, also known locally as the CVM, has abandoned its previous laissez-faire approach to cryptocurrency and now desires to play a significant role in the process of formulating policies governing the industry. A new team of leaders recently assumed control of the CVM, which may have contributed to the organization's recent about-face. However, the cryptocurrency industry might not be happy about this development. After being approved by the Senate, an almost entirely business-friendly piece of legislation is now well into the process of being drafted in the lower house. According to a report by Globo, the CVM is pushing for significant changes in the legislative framework that oversees cryptocurrency, which may make it impossible for the bill to be approved in Congress and brings back to square one policy debates concerning the industry. The news organization also stated that the main point of disagreement pertains to Article 1 of the bill, which essentially states that the CVM is not responsible for any coin that is not categorized as a security. This provision was described as the main point of disagreement by the news organization. However, the CVM has concerns over other aspects of the bill as well. In Turkey, newly released official numbers put year-on-year inflation at 80%, while unofficial estimates suggest actual inflation surpassed 140% as long back as April. The difference between these two sets of figures is due to rounding. These eye-popping figures have had a significant impact on the people living in Turkey, yet, many of them have discovered a very creative way to decrease the burden of inflation: cryptocurrency. Yes, despite the fact that Turkey has a reputation for being an authoritarian state, which might lead one to believe that cryptocurrencies are not tolerated in the Eurasian country, Turkey has one of the highest ownership rates of cryptocurrencies in the world, which demonstrates that Bitcoin is used for more than just risky speculation. The official index of consumer prices in Turkey increased by 80.2% year-on-year in August, following a rise of 79.6% in July, which was already an elevated level. This marks the first time since 1998 that official inflation has exceeded 80%, and it also marks the highest rate recorded during President Recep Tayyip Erdogan's almost 20-year reign of the country. It is generally agreed that lax monetary policy in Turkey is to blame for the country's high inflation. Nonetheless, Erdogan has refused to raise interest rates to a level at which they may potentially prevent further price increases. Having said that, the government forecasts that there will be a decline in inflation toward the end of the current year. A first for non-governmental organizations in South Korea. The South Korean branch of the non-profit organization World Vision has announced that it will accept donations made in the form of crypto assets. According to the news outlet Adaily as well as Mail Kyungjae, the charitable organization has struck a blockchain cooperation pact with the young company known as Publish. As a result of this decision, donors will be able to sponsor children living in poverty anywhere in the globe by using crypto assets as part of the Dreaming Children program run by the non-governmental organization. Donors in South Korea are given the opportunity to participate in a program that makes it possible for them to financially support a child in need. The new agreement between Publish and the charity will make it possible for cryptocurrency holders to utilize their tokens as a form of payment, and the startup will supply technological solutions that make it possible for the charity to change the cryptocurrencies it receives into Korean won in real time. An attorney for a Russian citizen accused of laundering more than $4 billion worth of cryptocurrency has asked the Kremlin to facilitate a prisoner exchange involving his client with the United States government. This request comes as relations between the United States and Russia continue to be strained as a result of Russia's invasion of Ukraine. In a letter that was acquired by Reuters, the attorney for Alexander Vinnik, a man who was extradited to the United States in August of last year to face allegations of money laundering, requested that Russia's Foreign Minister Sergei Lavrov set up a prisoner exchange that included his client. In the letter, attorney Frederick Bellet stated that now the only thing that can save Alexander is for the Russian Federation to enter into negotiations with the American authorities within the scope of the exchange of detainees between the countries listed. According to the indictment, Vinnik and his co-conspirators allegedly owned, operated, and administered BTC, a significant cybercrime and online money laundering entity that allowed its users to trade in Bitcoin with high levels of anonymity and developed a customer base that was heavily reliant on criminal activity. This information is according to a statement released by the United States Department of Justice. According to a post that was published on the blog of the cryptocurrency exchange Kucoin, which is based in the Seychelles, the company has brought to light flaws in the community proposal of the decentralized finance network Acala to recover billions of dollars worth of AUSD that were issued in error during an exploit in the middle of August. The blog drew attention to a number of apparent discrepancies in the Acala proposal's narrative of the exploit, including mistakes in the reported number of AUSD mints that were sent to and sold on Kucoin. According to a post on the company's blog, as a neutral platform, Kucoin has no intention of intervening in the governance of the Acala community. However, it has been discovered that a significant amount of the important information related to the CEX that is contained in the report and the proposal is inaccurate. According to Kucoin's account, which cited data from a list of the exchange's AUSD deposit addresses, hackers sent 8.03 million AUSD, rather than 4.937 million AUSD, to Kucoin, and 5.3 million AUSD, rather than 1 million AUSD, was traded on the platform. Kucoin's account also stated that 1 million AUSD was traded on the platform. CoinDesk's request for comment has not been met with a response from either Kucoin or Acala. Kucoin recommended on its blog that Acala should review the request made by its community because it appears to be based on data that may be erroneous. The exchange noted that actions taken by the community after evaluating the data, such as freezing and burning AUSD tokens, might do great damage to the Acala community and the price of the AUSD token. In an effort to educate people about scams that are prevalent in the cryptocurrency sector, crypto celebrity Fat Mintera pitched his own bogus investment scheme on Twitter, and he found interested investors almost immediately. On Twitter, he wrote, "In 2 hours, I received over 100 DMs in response to his claim that 99% of cryptocurrency ventures are frauds with the intention of making their creators wealthy." He stated that he was able to raise more than $100,000 with the sale of 3.45 BTC on Twitter and 2 BTC on Discord. He said that he had returned all of the money that had been given to him. It is just too simple to con people out of their cryptocurrency, and this must be remedied immediately, he wrote on Twitter. While he was advertising his phony investment scheme, he did not disclose the name of the fund, nor did he detail the trade, nor did he explain the source of the yield. However, many continued to invest. I want to convey a clear and strong message to everyone in the crypto industry: anyone who offers to deliver you free money is lying to you. I want to make that extremely clear. There is no such thing, was his response. Coming up next is a clip from Gareth Soloway explaining why Bitcoin isn't looking good in the short term.
I will give Bitcoin credit, right? We've seen the dollar continue to ratchet up day after day after day, and Bitcoin was just going sideways. So you could actually say, okay, Bitcoin was holding up. But I look at today's up move in the dollar as potentially the straw that broke the camel's back with Bitcoin. It's just so much pressure from a rising dollar and risk assets. I mean, we've seen the stock market rolling over, and Bitcoin for the last 10 days or so has just gone sideways. So it was almost inevitable, if the dollar was going to keep going up, that at some point we were going to break down here. And you can see a nasty red candle here. Now we do have potential support coming in around 17.5. That's going to be a big level. That's the June low. But my guess is that could be where we're headed at this point. But again, you know, I was optimistic the last few days, you know, looking at Bitcoin holding up and holding up for multiple days. And today's kind of like the wind coming out of the sails, if you will.
Since 19,000 was a key level for Bitcoin, it failed to hold, and now we are seeing Bitcoin trading for 18,000. It is very likely that the daily candle closes below 19K and we confirm a breakdown. According to Gareth, this scenario is likely to play out and we will ultimately see Bitcoin testing June lows of 17,000. This will be a deciding factor because if Bitcoin breaks below it too, it will continue to free fall into the 10 to 12,000 range. Bitcoin miner Marathon Digital reported that it activated around 25,000 previously installed miners in the month of August. This resulted in an increase of approximately 2.5 exahash per second in computing power, which brought the total hash rate to approximately 3.2 EH/s. The production of Bitcoin by the company reached 184 for the month of August, bringing the total for the year to date to 2,222. The number of Bitcoins held at the end of the month increased to 10,311 and had a fair market value of $206.7 million. During the course of the month, no coins were sold. Over the course of the next 3 months, about 65,000 additional miners, with a total capacity of 6.9 EH/s, will become operational in Marathon. The production of Bitcoin mined dropped from 1,259 in the first 3 months of the year to 707 in the second quarter as a result of delays in energization as well as problems connected to the weather. Contrary to popular belief, crypto finance is not about challenging the established standards of the financial industry or emancipating themselves from the control of traditional bankers. However, these established firms are also pushing back, stating that the way they conduct business adds a level of discipline that is now absent in the cryptocurrency industry. Take, for example, the crypto lending company Celsius Network, which recently declared bankruptcy after receiving a loan of $1 billion guaranteed by Bitcoin from the stablecoin issuer Tether the year before. The precise legal standing of that debt is currently being debated in courts located in the United States. Cryptocurrency startup 21.co, which is the parent company of exchange-traded product issuer 21 Shares and token provider Amun, has received a $25 million investment headed by the hedge fund firm Marshall Wass, which places a $2 billion valuation on the Swiss business. Ophelia Snyder and Haney Roshwan launched 21Co in 2018, and the company issued a statement saying that additional investors in the investment round include Collab Plus Currency, Quiet Ventures, ETFS Capital, and Valor Equity Partners. According to the statement released by the company, it has a valuation of $2 billion, making it the largest crypto unicorn in Switzerland. In an interview, Roshwan, the co-founder and chief executive officer of 21.co, stated that both Marshall Wass and Valor are examples of new investors who have joined the company. According to Marshall Wass, who led the majority of the investment with the biggest check, 80% of the total funding is new money, and the round was led by Marshall Wass. Thank you for watching. Subscribe to our channel to watch more informational videos like this on a daily basis. See you guys in the next one.